welcome to everybody to this session. This is the session dedicated to integrated reporting, top challenges and opportunities. Just to start with, we are supposed to be the expert of annual report. Then in the past years, we listened to and we tried to understand what is sustainability report, and now we have integrated report. So this session is dedicated to understand better what is integrated reporting. And I have the pleasure and the honor to have here on the stage with me high-level people who will try to provide some explanation, some input to understand why integrated reporting is really the future for reporting, for corporate reporting, or if it isn't. Just to start with, I want to start with the first guest. I will introduce them time by time. And I think it's worthwhile to start with trying with a definition of integrated reporting. So I will start with Neil Stevenson. Neil is the Managing Director of Global Implementation at IIRC. So he's supposed to be the expert about the definition of what integrated reporting is. Neil, please, can you provide us with a definition about integrated reporting? Thank you.
And good afternoon, everyone. I'm delighted to be here and congratulate the organisers of the World Congress of Accountants. So integrated reporting has been developed by a coalition of regulators, standard setters, corporates, companies, NGOs, and leading academic experts who've come together to develop the next step in corporate reporting. And our aim is to promote a coherent and efficient approach to corporate reporting and to improve the quality of information for providers of financial capital to help them make capital allocation decisions in a more effective way. And we believe that this should become, over the next few years, in the mainstream, the absolute norm for reporting, both in the private and the public sectors. So within our aim, we have set out guidance for an integrated report, and its purpose is to explain to providers of financial capital how an organisation creates value over time, and that includes providing insight about the resources and relationships used and affected by the organisation. And includes all the capitals, the resources that an organisation uses, and we've included intellectual, manufactured, financial, relationships and social and natural capital in that, and the human dimension as well. So the IR framework is fundamentally about your story as an organisation and how you are creating value. It brings together strategy, performance, risk, governance, and your future prospects. And it brings about a more integrated approach within the organisation, which we call integrated thinking. And it helps to break down silos and to engage with investors more widely. And ultimately, we believe that it's making the mind of the board more visible to the external world, in particular to the providers of financial capital. That would be a good starting point.
Thank you. I think that now we need to understand if there is some company already applying integrated reporting. And I am very happy to have here with us Suzanne Stormer. She's the Vice President for Corporate Sustainability of Novo Nordisk. And as far as I know, Novo Nordisk is disclosing an integrated reporting since 2004. So before integrated reporting will become a reality for a lot of people. So, Suzanne, you are involved in this process for a lot of years. Can you tell us your point of view about the definition? What is integrated reporting for you, for your company?
Well, first of all, let me ask, is there an accountant in the room? Because we actually had a mistake set from stage, which is also in the program catalog. So Novo Nordisk is operating out of Denmark, not Norway. But we consider ourselves a global player in the field of diabetes care. So let me say that this morning I met with a new friend here who's from Nigeria, Ada. And when we got introduced, I said, and there she is, I said, so I am working to change diabetes. And she said, rightly so, what does changing diabetes have to do with accounting? And I think that's a very good question. But let me answer the question this way. So integrated reporting, in my definition, is just like having diabetes. It is chronic, it is progressive, and it is irreversible. Meaning that once you start doing integrated reporting, there's no way back. So when we started doing integrated reporting back in 2004, the intent was to enhance our investors' ability to evaluate the company's performance. It is a known fact that only a fraction of the value that a company generates is passing through its books. So the books that the conventional auditing process is reviewing is only part of the picture. And we run our bottom line, so it means that we want to be responsible from a financial, a social, and an environmental perspective. And so we also wanted that to be reflected in our governance, in our management structures, and therefore also in our reporting. So that was why we started doing what is now known to be integrated reporting. We also ourselves tried to frame it as an integrated report, but to make that very first move, we made a very bold step, I would say, because we also kind of broke up all conventions around what reporting is like, what it should look like, and what should be the contents. And we had many interesting reactions. Some people loved it, and some people, and I would say most likely the majority of your profession, said, what is this? This is not a real report. So over the years since, we have been working to refine and enhance the quality of our reporting, and we can come back to that because what we present in one report has the same rigor, the same high quality as anything you would put in a financial report for audit.
Thank you. It's a strange definition, thinking of integrated reporting like a disease, but a happy one, not reversible, but something viral, I hope. And I think that now we should have the definition from the investor perspective because it's quite important to understand if, from the investor side, there is a point of view, a definition, an expectation about integrated reporting. So we have here David Shamai. He is a senior corporate governance specialist at APG Asset Manager in Netherlands. This time the country is fine. I'm sorry about Norway and Denmark before. So.
Yeah. Yes, so what does integrated reporting mean from an investor perspective? I think to put it very in a nutshell, most concisely, it's for us, it's having one place where we can see all the reported information that is relevant to making. Just a bit of, by way of background, APG Asset Management, we're pension investors in the Netherlands. We're actually the largest Dutch asset manager of pension funds with over 400 billion euro in asset under management, which means that we invested in thousands of companies around the world. And certainly one of the things we're very keen about is to ensure that we are discharging our obligations as responsible investors by taking into account all the range of relevant investment decision making. Of course, financials and the bottom line is at the heart of it, but also the full range of issues that could have an impact on asset allocation, on capital allocation within the company, and also on the long-term destiny of the company, because we are a pension investors, we do care about the long-term horizon. We care about how investments and how the companies in which we invest will continue to thrive in the next year, in the next 3 years, but also in the next 20 years and 30 years to be able to generate the yield that will be needed to make the payments to our pensioners. We do care about integrated reporting. We've been members of the working group that was part of the integrated reported, and we keep very close and also have dialogues with companies about the way that they implement it.
Thank you. You say long-term horizon, and before we heard about different capital, but I think that for a practitioner, it's really a big change. Vania, how we as accountancy profession can approach to integrated reporting? Vania Maria da Costa Borgert, she's an advisor of Brazilian Development Bank from Brazil. So, Vania, which is the practitioner definition approaching integrated reporting?
Thank you, Chiara. Let me try to explain, giving an example like Susan. I'm an accountant and I love accountancy. I think that 100 times I were to choose my profession, I again would choose accountancy because it is wonderful. And I've been married for the last 27 years and very happily married to the same man. And I think that the two things were very good for our marriage. First of all, my husband is not an accountant. He is adobing, so he is the owner of the voice of Bruce Willis and George Clooney back in Brazil, so it's good. And the second point, as we have 4 children at home, we usually take a night during the week to go away, the 2 of us, and talk to each other. And we used to go to the same restaurant for decades. And then I became pregnant of my 3rd child, and we needed a bigger apartment in order to accommodate another baby. And one of the apartments that we visited to buy, owners of this restaurant that we used to go, and we never came back. So as an accountant, it is pretty sure for me, it's pretty clear that to state if the company was able to produce profit or losses is not enough to the public. They need to know what happens in the kitchen of the companies. They need to know if these results were generated respecting the dignity of the human being and also the environment, because we need a planet to go on after we are no longer here. So that's integrated reporting for me. The capacity of the company to show itself to the market, to be transparent. A company is transparent when what it informs about itself allows the public to see inside the company. And the profit is not enough to provide that. We need additional information. So I would say, but then companies have been presenting sustainability report and social responsibility report for a long time now. But these reports are not connected. What is said in one page is not exactly combining and consistent what is said elsewhere in the report. So this is integrated reporting. It's the respect for the public to report with the same level of quality, not only profit, but everything that happens inside the company.
Just to let you know, we agree about some questions, but now I'm proposing them a question we don't agree on. So, in understanding the difference between sustainability and integrated, or in other words, do we really need integrated reporting? Can we just add an annual report and a sustainability report? Why? I am practicing this sustainability report now that I have learned these new rules. I need to forget them and try to understand integrated reporting. Why? Can you be, in a few words, can you convince all of us that we need integrated reporting and we cannot rely on sustainability report that we are quite accustomed to? Suzanne.
I'm very eager to respond because I have a slightly provocative response. In our company, what we did, as I explained, was really to combine the financial and the sustainability report into one. But the objective is that we want to get rid of both of them so that the continuing report will be our integrated report. And that, in my view, is really about the sustainability of the company, to be able to explain to investors and to other stakeholders why we are in business and how we intend to stay in business. So I would get rid of both of the conventional types of reporting by promoting the integrated report.
Someone else? Oh, Neil, and then...
Yeah, we may not go as far as saying you should jettison all the other reporting, but it certainly builds on all of the other forms of reporting. And I think the key thing for us is it's about the strategy and the value creation, about a concise view into the mind of the board. And we see things from the perspective of strategy. And I think we often describe integrated reporting as like a portal. It's a view into the ways in which a company or an organization is transparent. And it will lead to other information sets that will, of course, continue to be disclosed around other ways in which the organization is reporting.
Thank you. And you?
Yes, perhaps just to highlight the investor angle here, and also the day-to-day working, the functional meaning of what it is integrated and what integrated thinking means. And very frequently when we speak to our portfolio companies, we hear that they criticize us, investors, for speaking with two voices. They speak with the people who work in the ESG department, and they hear some things, and then they speak to the portfolio managers, and they have a different agenda with different sensitivities. I think integrated reporting actually takes it also into the investors to have an obligation or to have to do something to bring together the two agendas and to be able to articulate one investment rationale, one set of expectations that is just going to cut across both of these agendas. And it's true conceptually, but it's also true on just the reality of day to day. I mean, for example, we've just had a project looking at human capital management in the context of our telecom company portfolio, and that was something that was done by the sector portfolio manager for the sector and one of my colleagues who is leading the human capital project, and that brought and also involving companies, our investees that we talk to, and that brought all sorts of new insights that we could not have reached just by having the two parts separately.
You are convincing me. We need an integrated perspective. Tomorrow we will discuss about integrated thinking. It will be another important plenary session. But now we are focusing about the tool, about the reporting. And Vania, can you tell us why the organization you are representing should be involved in integrated reporting at a development bank in Brazil? Why a development bank should be involved in such a stuff that seems to apply to refer to a company?
I would say we have two purposes in that. The first one is an institutional one, because we are not profit-oriented. So we don't show our success in fulfilling our goals in the amount of profit that we generate, but in the amount of development. So non-financial information is much more important for us as a bank than the financial profitability that we are able to provide. And so to have a platform where we can report non-financial aspects in the same level of quality that we report the financial one would be very interesting for us institutionally. But besides that, we are a bank, and as a bank, we need to do credit assessment when we are to provide a loan to a client. And we want this client to be transparent, so we want to look at this client not only in the financial solidity of this client, but also the possibility of risks that are non-financial related that will escape the financial statements of that client. And to give examples to our client to present non-financial information in a level of quality, we were engaged in the pilot program. That's why we are part of this initiative.
Okay, but David, you as the investor side, we are talking about integrity reporting, we are talking about long-term perspective, but from your side, what's the problem with this new assessment framework? What's the problem with metrics? Do you find there is some problem, or are you satisfied with the current metrics, KPIs, measurement of natural capital, relationship capital, and so on?
Sure. I think I'm certainly satisfied with the framework, but I think now that it has a life, it will progress in its own way. I think from an investor's perspective, information needs to be of a certain quality for us to treat it as investment grade and then to act on it. It's not to say that we are ignoring other pieces of information, but you then have to apply judgment on to what extent on how you factor that into your decision making. Something that is part of the annual report of the company, something that is packaged and referenced together with the other pieces of information clearly meets this criteria of having being of good quality sufficiently to act on.
Okay, and now a challenge for Suzanne. Suzanne, can you share with us the benefit for your company, or generally speaking for a company, having integrated reporting? You have 10 years of experience on this, and can you share with us the most important benefits that you can propose for having an integrated reporting instead of a sustainability plus an annual report?
First of all, we talked before about the importance of speaking in one voice, so that you don't speak one voice when you have your sustainability report, which is perhaps more marketing orientated, and then you have a financial report, which is the dry and bare numbers. So bringing that together into one cohesive narrative is very important. But then I think I would also say, and I know that this will be more discussed tomorrow, that one of the main benefits has actually been how it has changed conversations internally. So having to sit together with people from legal department, from sales, from communication also, from the markets and from other functions, to sit around the table and agree on what is the most important information that we want to convey in this report, and to be able to select and deselect. And having those conversations also resonates and do their daily job. So it means that we think differently, and that is to the point about integrated reporting. And then I think also in terms of the quality of the information, that we have certainly learned a lot from trying to emulate the rigor that we use for financial reporting, and to use the same kind of approaches, the same internal control environment, the same quality assessment, and the same, alignment of processes, so that our assurance team and our audit team are working together just like we work together internally between the accounting people and the sustainability data management people. So I think a lot of convergence is a benefit that may not be seen in the report itself.
Thank you, Suzanne. Neil, do you agree on this? Do you have a general picture to share with us about the most common benefits about integrated reporting, perceived or real?
Thank you. I think in making my comment here, I think it's just worth remembering that the international IR framework is not yet 1 year old. So the developments, and I'm sure you'll hear more about them at the plenary session tomorrow, are actually phenomenal in less than 1 year. But we are, of course, now starting to monitor the evidence and the benefits. A recent PwC research report of analysts actually suggested that integrated reporting could help to lower the cost of capital, so that's a hard benefit already. A study from the US of 1,000 integrated type reports actually showed that the trend did move towards more long-term investors. And again, that I think is a very welcome message. But I really also want to echo what Suzanne was saying about the strategic benefits to the organization. And I think you just very ably summarized integrated thinking for us all. But actually, we have, through the consultancy Black Sun, commissioned research of the organizations that have been piloting and testing our framework over the past few years. And they have come back with some real benefits that are of the type Suzanne was referring to. And the findings are compelling, actually, ladies and gentlemen, that 92% of that group experienced an improved understanding of how they're creating value. 79% believed that the provider of financial capital has greater confidence in their long-term business model, are experiencing better long-term decision-making. And when we talk about aligning corporate behavior and investment decisions to financial stability and long-term sustainable development, those to me are really important findings that help to underline that mission that we have.
Thank you. Suzanne, before talk about the quality, I think that most of us are thinking about the value of the information provided with an integrated reporting. For accountants, the value, the quality, the reliability, the credibility, in one term, in one word, assurance. David, from the investor side, from the investor perspective, do you rely on integrated reporting, or what do you need to rely on integrated reporting information? Do you think that assurance can help, or do you rely on something else?
I think certainly assurance is the key thing that we rely on, and I think, as I said, if the fact that it's going to the additional information is going to be packaged together with the report to us will provide comfort. Just to illustrate that, in the Netherlands we have a corporate governance organization called Eumedion, which is an association of all the main Dutch investors, and including some non-Dutch investors there as well. And every year the organization, the Eumedion, write to all the listed companies to inform them about the focus of attention for investors for the coming year. And a few weeks ago the letter for next year was sent, and one of the two areas of focus was integrated reporting. And certainly, so setting the expectation that we would like to see more companies adopt that approach. Certainly, what underlines it is the fact that we do see the value in this additional disclosure.
So investors are asking for assurance, but Vania, from a practitioner point of view, is it possible to provide assurance on integrated reporting information, forward-looking, non-financial information, different capital, not only financial capital, but also natural capital, human capital, and so on? How can we, as accountant, as auditor, provide assurance on? Is there any project at international level that can help us?
I would say that assurance is essential because, as Suzanne said, for many, many years, companies have been presenting non-financial information, but giving just the good news and never the bad ones. And that was not good to help to build trust in this kind of report. And that's why not many investors nowadays use this kind of reports in order to make decisions. So the integrated reporting wants to solve this problem and to guarantee the possibility of assurance. We don't know how That's something that we have to uncover. And IAASB has recently created a group in order to study the problem and bring some opinions. Of course, it not be perfect in the first moment because it was not perfect for financial information as well. We took decades in order to improve quality in auditing financial. Much to do. And so I think that it's the same related to integrated reporting, but it's something that we start working on, and that will be very important to improve quality and acceptance of integrated reporting.
But do you really think it's a field for accountants providing assurance on integrated reports, or is it a market and a field for someone else?
The big accounting firms are already providing sort of assurance in this kind of report. That's why I think they are the best ones in order to do that. Not in a standalone basis. We will have to find a solution for that. But yes, I think they are the most possible one.
So we are claiming for having the expertise as accountant on providing assurance on integrated reporting, but what about company? Suzanne, first two questions, a two-folded question. The first one is, do you think that assurance is a value-added option? And the second, do you think that accountancy profession can play a role providing assurance on integrated reporting, or we should forget it?
To the last question, I hope you can. To the first question, I think we have one big headache left with our integrated reporting format as it now stands. And that is precisely the absence of a standard for the non-financial information. And because we don't have a standard or a framework, then we cannot get the assurance of a reasonable level. So that is actually where we are stuck. And I can perfectly understand that the accounting profession needs to also be holding up against its own standards and its own criteria of professionalism. So in our case, we use the IFRS for our financial reporting, and we have developed on our own definitions of accounting principles because none such exist. So you can measure up against that and see if it fits, and that's fine. But then what we need from our assurance providers is really two things. One is to say, we trust your data to be good enough, and in order to do that, the systems, the underlying data capturing systems need to be in place. And they are, but they just lack a small fraction. And the other one that I would also appeal to this audience is that we need them to be able to make a sound professional judgment on what is the quality of the information that is provided here. And for that purpose, our assurance team are using the A1000 standard, which is not designed for integrated reporting, but it's the best that we have. So what we would like to see is coming out of your project a more cohesive framework for how we measure the information that we provide.
Thank you, Suzanne. I like very much your reference to the professional judgment. I think that this is a field where we as accountants can play a very important role, because the background of our profession is to provide a professional judgment, not only to follow some procedures to provide assurance. But Neil, is there any contribution from the IIRC perspective about assurance?
Thank you, Chiara. First, I wanted to make a quick plug. On the conference app that you all have, under the documents section, we've put up a new document called Creating Value, and that talks an awful lot around the benefits of integrated reporting. So I do urge you all to download that, and hopefully that will be of interest to you and your boards. On assurance, we wanted to raise a debate, and I'd like to start my comments by saying what we're not. We are not trying to set ourselves up as experts in assurance. You'll be pleased to know that we consider there are others that, that are experts. But perhaps to start my response by saying we share your view that integrated reports should be investment grade, and that does lend them towards the requirement for assurance. Which is why we've raised a debate on the subject and a paper that is out for consultation until the 1st of December, so there's plenty of time still for you all to go read the paper and provide us with your thoughts on a number of questions. I think I'd like to say that whatever the solution, it has to be demand-led, and I think David's evidence is that there's a demand and backed up by my fellow panelists. So that's something that is absolutely crucial. And I also really welcome the comment about professional judgment, and I think the professional ethics that you all have as professional accountants are going to be very important here. And I say that because there is a temptation sometimes when the word assurance is mentioned to rush to external assurance. And I think in this context, we need to think about the assurance the board can provide itself, the role of internal audit, and wider connections in this whole space. And indeed, our whole theory that we're looking for innovation, and we would hope assurance as well. Two things to note: we've been holding roundtables around the world on this subject in a wide range of countries, and the types of issues I've described have already come up, so that's good news. And you'll be pleased to hear, panel, that professional judgment was also reinforced in that discussion, as were the whole broader areas of credibility and trust. And the other thing to note is that the International Audit and Assurance Standards Board, IAASB, has set up a working group under Chair Meren Kelsel, and we welcome that development as a way of taking forward the whole discussion.
Thank you. Definitely another challenge is materiality. I mean, we can find an integrated reporting very well made, but with some important information, but I think that materiality issue should be tackled at a high level. So who wants to contribute on the materiality issue? Suzanne first?
Yep.
Okay, Suzanne.
I mean, I can go first. So again, in preparing our integrated report, we follow all of the international frameworks that apply. So Novo Nordisk is listed on the stock exchange in Copenhagen and in New York. So we report also to the SEC and to the Copenhagen Stock Exchange. And following materiality definitions, we were in a situation where we actually had to adhere to 5 different definitions of materiality. So one was GRI, one was the accountabilities A1000, one is IFRS, one is IR, integrated reporting, and one is from SASB. And so it's evident that we need to provide some kind of alignment. And I'm very pleased to see that SASB has adapted to the IR definition, so that is one down. But we still need to think about what is the perspective when you define materiality. So we choose to look at materiality from the company perspective. So what we bring to you in our annual report is the most important. It's like making a menu to make a dinner for you, which is the absolutely best that we can provide and which is a good expression of what we do. And then based on the challenges from our assurance providers to ensure that this presents a balanced and fair view.
Thank you. David?
Yes, I think I absolutely agree. I mean, if an issue is not material to the company, then why would we as investors be interested in talking about it? Perhaps we're going to be interested to talk about it because of external reasons, reputational issues for us, although the issue is not material for the company, but materiality from the perspective of the company is very much at the core of it. I think the other point I really have to agree with is the complexity of the issues and the different thresholds. So as I'm sure this audience will know, even when we talk about materiality in an accounting context, there are a number of definitions, a number of thresholds. Materiality that is used for preparation of the accounts is not the same as say, disclosure on pay or for cash accounting, the different threshold of materiality. And I think what we're seeing now in the context of accounting is with a trend towards more richer audit committee reports and external auditors' reports, more information is coming to the discussion. And I know there's a separate session about it. It's not for this session, but I'm just drawing an analogy. And I think the more information is going to come through from integrated reporting, that would enrich the discussion on that as well.
Sorry, Karen. I'll just add to that because we, as a practitioner, would love to have a definition of materiality that, regardless the company, we apply the formula, you end up with the same number. And we are forgetting that integrated reporting is principle-based. So it is based on the business model of the company. You shouldn't have a definition from outside, but you from inside should tell the people what is material for your business, for the aspect, the characteristics that you have inside your company. It's completely different from other companies, even if they are in the same sector of you. And so we need some general definition, but the final one should be provided by the company itself. It would be very comfortable for us to have a checklist in order to provide, to generate our reports. And that would be comfortable because we will not be forced to look inside. And our report should illustrate what we are inside. So we have to look at ourselves and define ourselves and then show for outside public how we are.
So you mean being so tailor-made materiality, there is a room for the professional judgment. I mean, otherwise perhaps there will be less room, so this is a good news. But Neil, do you think there is enough clarity inside the document of IIRC about the materiality? Because sometimes I wonder if sustainability people, fans of sustainability, understand the difference between materiality approach in sustainability and in integrated reporting. Can you tell us something about this?
I think the most important thing I'd say today is really to echo the principles-based point that you were making. And I think it's crucial. I mean, if you remember from my introduction, I was talking about you telling your story about your organization, and the whole approach about integrated reporting is about making that a concise story that is relevant to investors and other stakeholders. So from that point of view, materiality, of course, is important as a means to determine what should go into that story. So I think that's the most important thing. And we have resisted providing guides and manuals because we wish to see leading practice evolve, and that's crucial. And we also want organizations to tell their own individual story and not to feel that they have to follow rules. So I agree with all of that. What I can confirm, though, is we do, of course, recognize that there are a number of definitions of materiality that are out there. So we have commissioned, or we're working closely with one of our co-organizers here today, IFAC, who are leading a project on materiality to work through the alignment and to provide practical tool for preparers. So we hope that will, as that develops, that will actually help preparers. But as I say, what we want to avoid is kind of giving this kind of tick box type approach.
Thank you, Neil. But now, I don't know if you share with me this feeling. I wonder if integrated reporting is fitting only for big corporation, or if it's we can apply it also to SMEs, small and medium enterprises, because a lot of us works with SMEs, and it's quite interesting for us to understand if this is a tool, a very successful tool, very powerful tool, but only for listed or big corporation. We just want to know, what's your impression on this? Is integrated reporting dedicated primarily to big corporation, or is it also a tool that we can apply to SMEs? Who wants to be the first of you? David.
Well, I can think about a number of ways that SMEs could be impacted by the implications by applying integrated reporting or not. I mean, certainly we're a global investor. We invested in companies across everywhere. And what's happening is that increasingly we're deepening the discussion with our investees to areas that are concerned to us, say labor rights or human rights. And what we're seeing over the last few years is that the dialogue is getting deeper and deeper into also further down the supply chains of those companies at which we invest, and sometimes into discussions about their suppliers and their suppliers, etc. So I guess quite a lot of the businesses that we term here SMEs could be impacted by that. I think another way is that again, because of the scale, we find that we are increasingly using quantitative methods to filter and to scrutinize the portfolio companies, and I guess that by using reporting methods that are internationally recognizable, you just running increasing the likelihood of going into the radar screen of investors and benefiting from having good systems.
Okay, someone else, you, Neil.
Thank you. I mean, I passionately believe in the relevance of reporting to SMEs. I mean, I think it's true to say that the initial focus of our work has been on large companies who themselves have great drivers and ambitions to change, improve their reporting, and as we've heard plenty of great examples today. And I think about SMEs, think about in our, firstly in terms of our mission, it's to make corporate reporting a mainstream norm for the way in which reporting is done. And I'm well aware that a vast majority of organisations are in the SME bracket. So absolutely in our long-term ambition, it would be that SMEs all adopt integrated reporting. And I'd just say two things about that. Firstly is our framework emphasises better and concise reporting, not more reporting. So that should actually be really, very relevant, I believe, in terms of SMEs telling your story, thinking about attracting investors, financial providers for the future. All the things that you were saying about the whole value chain. But I think the other thing is it's tempting to think that a bigger organisation has more resources to do this kind of thing, but also they're much more complicated, and very often their systems are very well entrenched in the organisation. It takes a lot of investment and effort to change the processes and systems. For some SMEs to adopt this type of reporting, and it may actually benefit them strategically as well. So I would hope that we will see over time leading practice coming from the SME sector too.
Vania and then Suzanne.
I agree completely with Neil. I think that the big difference between integrated reporting for big and for SMEs is that it is very easy to convince a large company to use integrated reporting. It's easy to understand the importance of that. But it is difficult to implement because these large companies already have a culture of reporting that should be changed and modified. And for SMEs, their business are not so complex, so it would be so easy to implement. But it's difficult to convince them that this is important. And we created a group in Brazil with an entity that is specialized in small and medium company in order to try to help these companies to understand this importance while they are still so small, because it would be so easy if they start reporting with high quality in all the dimensions. It would be so easy for that company to understand better their own business and then to make better decisions in managing this business.
Okay, and Suzanne?
Just very quickly, because I think all the important things have been said. So just one, the European Commission has also, in its recent ruling, exempted the small and medium-sized companies from the mandatory non-financial reporting. But honestly, it's not the small companies that issue 250-page reports. And we should be mindful also that there's another trend going on at the same time, namely to be able to cut the clutter. And I am sure that most small and medium-sized companies will be able, when they go to their bank or when they hire people, to be able to tell in a very simple, concise story what their business is all about and why they need money or why they need labor or whatever. And that really is the essence of where we want to go with integrated reporting. So as said, it's probably easier to do something smart from the outset than to have to really slim and trim a huge report.
Thank you. I want to pick up two questions from the audience, and they are two accounting profession questions. And I just go through them, a couple of them. How does integrated reporting compares with a value-added statement? I mean, I understand that the question, this is a question from Nam Kong, and I understand that the question is, how can we use our knowledge about value-added statement, about other tools that we are accustomed with inside integrated reporting? And related to this, the other question is, does integrated reporting follow any standard, particularly IPSAS and IFRS? And again, the concern is about having a solid basis of accounting principle, a land that we know very well, and then we have to make a journey, and we want to know if these tools that we perfectly know are useful for us as accountants. So, Neil, I think it's for you.
Answer the last question first. We welcome convergence around the world of IFRS and international accounting standards. It provides the crucial basis for reporting, and we certainly would welcome that momentum. And absolutely, to reassure people, we're not trying to reinvent reporting frameworks that are already there. Integrated reporting, as you will see from the slide that will come back in 1 second, financial capital is a crucial part of what we do. And of course, the sort of finance will always be crucial to all organizations. And of course, you play a crucial role there. And actually, in our framework, we're very explicit that you should be using the reporting framework standards that are already available to you to report on the material capitals. And it's hard to think of any organization that doesn't actually rely on financial capital to some degree. So in that regard, we would always expect you to report on that. And in terms of the underlying reporting, that would be IFRS or FASB or other meaningful financial reporting metrics.
Thank you. If I can add something about the value-added statement, I just want to draw your attention about the externalities. Externalities are not embedded in the value-added statement, and they are crucial in integrated reporting perspective. So definitely, you can start from a value-added approach, but value-added is just a way to allocate profit and loss lines. And when we talk about integrated reporting, we are talking about different capitals and externalities. So I am not sure how we can use a value-added statement inside an integrated reporting approach. This is by my judgment, but I want to share with you. What do you think, Vanya, perhaps from a practical practitioner?
Well, I think that integrated reporting is not here to replace any kind of statements, like Neil said. If you use IFRS in your financial statements, you can keep using IFRS. If you use US GAAP, you can keep using US GAAP. If you use, for example, GRI for your sustainability, you can keep using GRI. It is not about the final report, but the process of reporting to guarantee conciseness and connectivity among information that you provide. And it's the same. If you have a statement of value added to present what was done with the result that you generate, you can keep doing that, because the purpose of integrated reporting is show how you create value and what are you doing with this value that you created, and how you create value in the short term, but even in the long term. not exactly the same purpose, because value-added statement just show what you've done with the profit that you generate in the past. And integrated reporting is looking for the future, for the strategy of the company as well.
Thank you. Someone else on this? No. I have another dilemma. What do you think about having integrated reporting on voluntary basis or mandatory? I think we should start from a general picture in the world. Perhaps, Neil, you can provide the general picture if there are any countries where it is mandatory. And then we can grab your opinion, have your opinion about having it on mandatory basis or voluntary.
Thank you. Well, the mandatory market is South Africa, where it has been adopted on a comply or explain basis for all listed companies. But we've welcomed very much the endorsement that a number of regulators and stock exchanges have given around the world. For example, in Brazil, Bovespa has been very clear that it welcomes integrated reporting. And indeed, there's a report that has gone to the G20, which urges, among others, the IIRC to consider how integrated reporting can assist in long-term investment decisions, and particularly looking at infrastructure investment. So in terms of the wider landscape, it's very clear that the general endorsement, the welcoming of the direction from regulators is a great benefit to what we're doing, and in that regard there are many good examples that I could cite. The view that we have is that we're looking for leading practice and innovation to emerge, and at this point in time, it's not the right moment to seek to mandate integrated reporting as a general position. And as we feel that what that could do is just be a bit too premature. It could actually stifle perhaps some of the innovation and leading practice that we are seeing emerging now. And that's something that we think may well come at some point, but at this current time we feel it won't add to what we're trying to do.
Someone else? Okay.
Yeah, I mean, in Denmark, we've had requirements of the largest companies in the country to report on certain non-financial parameters for a number of years. And that model has been adapted or adopted in the latest European Commission requirements for non-financial reporting, and even tightened somewhat. And I think what was really gratifying to see in the new amendment from the European Commission is that it is asking companies to report on their non-financial performance and invite consistency with frameworks such as the integrated reporting framework. So that way we are seeing some kind of convergence. But again, I would say I appreciate the fact that the IR framework is not intended to be mandatory. The mandatory should be driven by states or by interstate initiatives. But I would like to see mandatory integrated reporting, basically because, as you see in the graph that is here just now, if you don't mandate information about all of this white box, then you're actually losing value. Okay. So if it is important, it should be mandatory.
And what about you, Vanya?
I agree. I have discussed this with both to be mandatory, because we need all companies to be reporting under the same basis. But I also agree with Neil, it's not for now. We are in the version 1.0 of the framework. There is much to be improved in this documentation, and I think that what is important is for us to apply the framework as it is now in order to help IIRC to identify the problems, what should be improved in this document before it becomes mandatory. In Brazil, the stock exchange has amended its regulation last May because it had a regulation report or explain sustainability report, and it amended a sustainability or integrated report, and if not, explain why. And the Brazilian Central Bank has established the obligation of financial institutions to present a policy, a social environmental policy until February, and in the same base report or explain, and that I think it's the way to be right now. But in the future, I understand that regulators will understand the importance and the improvement in transparency and start requiring that. What I've been doing in Brazil is recommending companies not to wait for that to happen, because the main difficulty in implementing integrated reporting is changing culture. You cannot change culture pressing a button. It has to change the mindset of people. So the earlier you start, the best result you'll be achieving.
Thank you, Vania. And from your point of view?
Yeah, I very much agree that there is benefit from encouraging companies to do that. It provides consistent guidance, also empowers the people within the company that are tasked with doing it, but also that there's no necessarily need for prescription if the regulation. I mean, my preferred approach would be along the lines that I described in the Netherlands, the investor letter by Eumedion, which tend to be quite persuasive if to judge based on previous letters. Last year, for example, the focus letter from Eumedion was on encouraging companies to adopt enhanced auditors report, and a year later 100% of all large listed companies adopted it, and it's down to 60% adoption for the smaller companies. And so I think an approach like that could work. Also, it does recognize that it is very difficult. It's unrealistically challenging to expect all companies to jump into full-fledged integrated reporting. So, for example, on the question of whether integrated report should be a one as part of the whole report, or should be a standalone separate report, on that question, we expressed a preference to it being part, but also acknowledgement that this is not an absolute requirement, that it's something that can happen over time.
Thank you. So if your wish becomes a reality in the future, we can say that annual report should evolve towards integrated report, if I have well understood what you mean. I'm not sure that all of us agree on this, but later we can discuss, and I will be happy to have your contribution on this. But I am not sure that we are clear enough about the situation today. What about a company publishing an annual report by law, and this company wants to adopt an integrated report? What happened? I mean, should this company have both, or what happened? There is no enough clarity among the public on this. Vania?
Yes, maybe I can start this, because we reported for the first time in integrated reporting. It was not another report. It's not obligatory in Brazil. Integrated report aims at working the process of reporting, not the final documentation itself. So what we presented is a much more concise report. And we give much more information than we used to give in the lots of pages that we used to present under the regulatory basis in the past. And I don't think that it is another report. It can be a replacement. Because nowadays we generate our annual report sending memorandums to several departments of division in our companies. And we receive the answer, and then you put together in our report without criticizing, because we do not understand what was answered by the specific division. And so the end result is that our reports are bigger and bigger and bigger and bigger and bigger, because we have to report everything that is sent to us. And the integrated thinking that we'll be discussing better tomorrow, we have come to change that, to improve communication within the company, so everyone understands that we are reporting the corporation, not the individual performance of every single department within the company. And that's a huge change in reporting.
Definitely. Someone else on this?
We publish an annual integrated report, which is 112 pages. About 60% of the content is statements These statements are financial statements, environmental statements, and social statements, and then the rest is a narrative, which is the cohesive storyline around the company's priorities. So in that regard, we have one integrated report, but we also have had to recognize that there are some specific requirements for additional information. So we also publish a corporate governance report, a report to the SEC, the Form 20F, which is mandatory. We report to the UN Global Compact, which is a voluntary report on the 10 principles. So we haven't been able to really get rid of the series or the different focus of reporting. But I think one thing that is really important when you talk about slimming down is that the report is the official document that gets the stamp from the auditors. And so it becomes kind of the mother document that you can use and reference. But you should also think about it as not the end of conversations, but really the beginning of conversations with stakeholders. So when we go out and meet with investors, we can dive into some detailed information that they would like to have, which may not be in the report, but which is something that has a specific interest, and similarly with other stakeholders. So I think we should also not overemphasize the importance of the report.
Thank you. Someone else on this?
I really want to reinforce the point that this is an integrated reporting framework. It's about the whole process, the journey, and we call it connectivity. Don't we in the framework, but it's the whole way in which, all ways in which one is transparent or telling the story are connected and linked up is actually really important to what we're trying to do. I think the one thing in terms of adoption is the framework that we have is quite explicit, that we don't expect it to be just necessarily a separate report. It can be adopted within the context of the reporting requirements. But I think more importantly for today, we frequently talk about a journey, and I really wanted to pick up on the wider integrated thinking aspects. It may take a number of reporting cycles to get to a point where all of the elements are really working well together. And that's why I think we should really come back to the fact this is a board, it's an issue for the board. This is not just about a reporting process and people in the organization. And, you know, I would hope, David, that, you know, investors want to see what's in the mind of the board. They want to see the strategy, the direction, and reporting is one of the means of evidencing that. And I think that's actually really crucial to how anyone going about it should really think this through.
Yeah. Do you want, David, on this? Having both annual and integrated reporting, and perhaps also sustainability.
Yes, I mean, I'm just agreeing with things here. I mean, the link between board or the tone from the top to then how it is operationalized throughout the company, then the reporting and the monitoring and the feeding back to the board. That is a cycle that is in the genes of how we're engaging on these areas. So totally agree with that.
Okay, so you are comfortable with it. I have an interesting question for all of you. We didn't talk before about technology, and specifically about information technology. The question I have here is really about the link between information technology system and the capability to produce an integrated reporting. But I prefer to have a broader picture, asking you, what do you think about the role of technology inside the integrated thinking and integrated reporting? And then if you can talk also about IT system and integrated reporting.
I can start.
Okay, Vania.
I think that we live in a time where technology is essential. Our kids already are born with some device in their hands, and they're much more able than us. And I think we should use technology in favor of reporting in order to make our reports more concise. We can report what is essential and put the additional information available for who has interest in going deep in each aspect through the website and everything else. So I think that will be very good, because what the market does not need is additional information right now. There is an excess of information, and this is not informing the market, but disinforming, because no one will start reading volumes and volumes and volumes of report. But if you have the basic in your report and put the additional information for those who had a specific interest within your website, that would be wonderful.
Thank you, Vania. Suzanne and then Neil.
Yeah, so as I talked about our report before, it is audited and assured. So we find it really important to be able to draw a line around that and say this is information that has been validated. So we used to provide a number of also data points in a website or a web universe, making it really clear when are you in the annual report and when you're outside of it. But we found that was a little bit disturbing and difficult for stakeholders to judge. So I think that we will not see an annual report as a finite document disappear. Having said that, I think we'll see much more real-time data being able or being made available. And if we don't provide it as companies, then others will provide it and leave it to the stakeholders to interpret it. So I think we might as well be alert to technology, but I think in terms of the annual report as such, or the document, this is more about delivery forms.
Thank you. Neil?
Well, I wanted to remind the audience of the plenary session that started this World Congress yesterday, and we heard very much, I think, about two big preoccupations of the CFO. And one was about the long term and how to manage the long term with the need to deal with the short term. And I think that's very relevant to our discussion. But the second thing was data and analytics and its importance. And I actually believe there's a concurrent session on that very theme right now. But to me, that's going to be very important. We talk about innovation in reporting, and there's no doubt that technology will be part of the means of reporting, but it will also be a means of engaging more widely with stakeholders. But the other thing, and I'm glad this slide is here right at the right moment, of course, we're talking increasingly about the digital age and the rise of intangible assets, and that's one of the drivers for integrated reporting. I don't think it's said as often as it should be. And again, technology solutions are going to be very much part of what businesses do, and I believe how they report. Forthcoming, we will hope to set up a technology network so we can actually start to understand what some of those needs are in this area.
Thank you. David, do you want to spend some words about technology and integrated reporting?
Yeah, I certainly have sympathy to companies facing changing disclosure requirement, and therefore finding that from a year to year, or from whenever a new disclosure reporting requirement comes to force, the systems need to adapt and to support that. And I have all the sympathy for that. Therefore, the point about a certain level of patience to let things develop and a few reporting cycles to pass. But I think the other thing maybe to bear in mind is this distinction that not everything that is, not any information in this day and age of lots of information, lots of data, not everything that is information is also investment relevant information, and that's where the need is for judgment to keep the things that are relevant and to find another place to the things that possibly are interesting, possibly companies worked hard for and will be relevant to stakeholders other than investors, and maybe find them another place that is more appropriate for communicating to these constituents.
Thank you. If there is someone who wants to, who has a question and doesn't want to use the technology, there is the microphone. I will be happy to give you the opportunity to raise a question. So if there is someone, okay. Introduce yourself, please.
Thank you. I'm Anwaruddin Chowdhury from the Institute of Chartered Accountants of Bangladesh. On a simplistic basis, as we understand it, integrated reporting entails combining financial information based on standards prepared financial reports and non-financial information. Generally now we use the triple bottom line approach recommended by the GRI in terms of environment, social and governance aspects. A couple of years earlier, there was a thought as to whether integrated reporting will stay on or have a spinning effect. Now we have seen it is staying on. So my question to the IIRC is, what is the level of implementation of integrated reports on a global basis? And I think the second question that had been partly discussed on whether it should constitute the main annual corporate report or be annexed as a supplementary report, just like a sustainability reporting, sustainability reports are now being done. Thank you.
Thank you. Can we get some other question and then we try to answer to all of them? Okay.
Lawal Itopal Lamidi, ICANN Nigeria. I've always had this mindset of accountant providing a reporting system that align with common sense. In 2005, I had this publication, which I tag Commonsensical Management Information System. For those who want to have details of this publication, you can Google Commonsensical Management Information System / Lawal Itopalamidi. Now, the integrated reporting system actually has a convergence with my own commonsensical reporting system. But there is a challenge. The challenge is the focus on the non-financial matters. And one essential quality of any reporting system is comparability over a period of time. So how do we hope to actually address this challenge of comparability? More especially since the focus is on non-financial matter. Then we also have the issue again. I have a problem with the term integrated reporting. How integrated is integrated reporting system? To me, integrated reporting system, the way it has been discussed here, it's a special purpose financial statement or reporting system that focus mainly on the needs of investors, then how integrated it is. When you have many users of financial statement, you have to address that.
Yeah, thank you very much. My name is Mr. Okura Samuel from Nigeria. Most countries are grappling with the implementation of IFRS and IPSAS. And now we are having this integrated reporting thing. For clarity, where does the requirement by IFRS and IPSAS stop, and where does the integrated reporting system start? And then I've seen a risk. We have not gotten exactly the standards or the requirements that every organization reporting using this integrated reporting system should disclose. But I have a feeling of the fact that if a company discloses everything, there is that risk that other organizations may use such information to destroy them, especially the rival companies. A common example is what is happening between Apple and Samsung. And what is integrated reporting system doing to take care of such risks that may arise? Thank you very much.
I think again my question is very, very closely to this one, but let me expand it. The basic annual, my name is Augustine Addo, Technical Director of Institute of Chartered Accountants, Ghana. The basic annual reports that every company presents, which is prescribed by International Accounting Standards number 1, contains the basic financial statements and together with it, the non-financial statements like auditor's report, corporate information, corporate governance, the financial and operating statements and others. Now, in recent times, we add things like social reporting, environmental reporting, sustainability reporting. Now we are being asked to do integrated reporting. If you look at the integrated reporting framework, the 8 content elements, I ask myself, if I report that like the last statement questioner said or contributor said, if you look at the 8 content elements and I report on that, especially the content element regarding strategy, are you not exposing ourselves to competition? I mean, if we look at the basic ones required by IAS 1, and that we add, and adding that, would that not suffice? And again, my last one, that's just a comment. I thought the expertise that we have could have driven us through the content element of integrated reporting before talking about the discussion. Thank you.
Two additional questions, and then we have the first round of answers.
Okay. Good afternoon, everybody. My name is Blessing Asapogo from Institute of Chartered Accountants of Nigeria. Talking about integrated reporting, we said it involves both financial and non-financial, and that it involves value creation also. Then we know that it's not only the finance or the accounts department in an organization that creates value in the organization. So my question is, what are the roles of the other departments in the organization in producing the integrated report? Thank you very much.
Thank you. The last question for this first round.
Good afternoon, all. My name is Solomon. I'm from Nigeria. Now, my question is very simple. How does integrated reporting fit into the world of corporate governance?
We have a lot of inputs and a lot of challenges. Who wants to be the first to tackle some issues? I don't think we have to follow the order, so we can provide some input when
I'm happy to start with a few comments, and thank you everyone for really great comments and insights. And clearly it looks like we could have another hour at least on this subject, so I'll try and pick up a few thoughts. I think an overriding comment I would make here, and it's a point that's been made by our board, is that the age of transparency is now here, and it's here to stay. And the idea that you can kind of hide things as we go forward is just not going to wash with anyone, and least of all customers and consumers, but certainly over time it won't with investors either, who are, we discussed today, already demanding greater transparency and to know about strategy in the wider areas. So there's clearly a balance here, because an entity clearly can't disclose competitive secrets that will damage its future prospects. But we do out in the framework that there are ways of discussing strategy, performance, future prospects that don't actually cause competitive concerns, but which actually do fulfill the requirements of all your stakeholders for wider transparency and a more meaningful discussion around value creation. There was something around, and I won't try and answer them all because I'm sure others will pick up on ones, but you know, it is our view that this is a standalone or a separate report. And I think I tried to suggest this earlier. It will vary in different jurisdictions according to different reporting norms. The framework's clear, I think, that over time we would hope that this will become like the umbrella for corporate reporting, and in that regard build on existing frameworks. I just want to make one other comment that I think is relevant for today. The person who asked about comparability, and that really is a crucial area and something that I know is something that investors and others really seek. We've convened a corporate reporting dialogue to help with discussion around alignment and comparability between frameworks and standard setters, and we've included in that, and the participants are frameworks and standard setters with international impact, and that's really just started and is something that we look forward to participating in alongside the other organisations on it. And that includes all of the frameworks that we've discussed today, and I think that's the appropriate environment to talk about issues relating to comparability and alignment between the respective frameworks that are out there.
Thank you.
Yeah, I can address the questions about corporate governance and also the data comparability. So it's a very interesting question how it relates to corporate governance. And I also noted the comment that it would have been nice to have had kind of a lecture in how to do an integrated report. And I think you will have various answers depending on the company. So let me just give you the perspective from our company. So in terms of corporate governance, the board of directors, the independent board of directors, is the signatory for the integrated report, and it is approved at the annual general meeting. The data that goes into the report is validated, and it's also being discussed by the audit committee, which is under the board of directors. So I am responsible for the integrated report. I present to the audit committee what data we want to include or exclude, and the audit committee finally approves of it. And on that note, comparability is essential, because we do not introduce new data, new KPIs, unless we have comparable data 2 years in advance, and that they follow the same rigorous criteria we have for inclusion of data. So I think on that, you can rely on the robustness of our form of reporting. I think just briefly on the focus on investors, we have chosen to say that the integrated report is intended for investors because we would like to ensure that their decision-making is informed by what we call a holistic picture. This is not to say that it does not also appeal to other stakeholders, but as I said before, I think other stakeholders we will have dialogues with in other forms.
Thank you. David? And
yes,
then
so I think that start with the point, actually with your last point, Suzanne, the issue about speaking to a number of constituents. So my view, and maybe you would say that's to be expected, certainly would be that to keep the reporting as a tool of communicating with investors, and as for communication with other stakeholders, to do it in the ways that are best work for the other stakeholders that are quite legitimate and quite important. So it's not, but this is a tool that is most appropriate for investors. So that's the answer to that. I guess the other point that was made about overly be transparent. I think the issue here is that integrated reporting gives the companies the opportunity to be in control of their own value creation story. And the risk is that if they don't seize that opportunity, then that will be taken out of their hands, and the information that is out there, whether accurate or not, will be seized by others and will be used. So I think the risk probably outweighs some of the issues there. And from the perspective of investors, we are constantly NGOs, by interested parties, people who have access to all sorts of information, and putting us or putting the questions to us about companies' behavior, companies' controversy, and therefore we have to to make sure that we put that work in advance and that we know all these things. So the more we have from the companies information that is credible, that is verifiable, then that's, I think, great for the companies themselves. I think, finally, the point about corporate governance, and completely agree that if a company has a good corporate governance in place, which is an important element of it is having a board that is informed, that is inquisitive, that is discharging its obligations to supervise properly, then this information is going to be within the company. And then it's really about just having the systems in the company and the right structure to bring together the so-called integrated thinking, and then to put it as an output to reporting. So in a way, the ability to have a good integrated reporting is evidence that the company is also well governed.
Thank you. Vanya?
Just to stress something, integrated report is not to replace any kind of a statement. For example, if you use the IFRS for the financial statement, you keep on using it. So we are not replacing the already existing reporting with a new platform of reporting and so on. If you are a public entity, you use IPSAS and so on. About comparability, when you establish your business model, you identify what is important, and you compare yourself along the time using these portrait that you provided for the companies. But about the competition, I think it is very important to say, no one is your business secret. No one is asking Coca-Cola to publish the formula that they use to provide their product. It's not that. What integrated reporting is stating is that what you do not tell about yourself to the market will try to guess, and you make decision about the image they reach on. So it is much better if you are the one to tell your story, if you are the one to tell how you are and how you operate and how you do business. And it's no longer a time to use confidentiality as an excuse to not being transparent. You have to learn to be efficient in exploring your business, being transparent at the same time. And if you don't do that, you suffer the consequences. And there was something else that it escaped my mind. It's okay.
I think that we have plenty of questions because integrated reporting is quite new, and I don't think that we can go through all of them. The time is gone, and I think that in this session we achieved the objective. My personal objective was to not only to raise awareness among accountants about integrated reporting, but also to believe together that it's an opportunity for us as a profession. It's the evolution of corporate reporting. It's happening. I prefer to be inside something is happening than that stay happening. And of course, we have a lot of things, details that are not very, very clear, but there is a room for us as accountants to shape the future, to contribute, to play a role, to define these details. So I think this is a good news for our profession. I wish to thank all of you, but especially a special thanks high-level guests, and I want to thank personally Neil Stevenson from IIRC, Suzanne Storm from Novo Nordisk, Vania Maria da Costa Borgert from Brazilian Development Bank, and David Shamai from APG Asset Manager. Thank you.